Now this is big enough that I'm releasing a video on Monday, which I never do, so don't judge me too harshly if it doesn't have the usual production elements, as it was not what was on the schedule today, but I felt like this information needed to go out now and not wait. So the Evergrande situation, Evergrande, however the heck you pronounce it, I'm sorry, I don't know. Anyways, that whole situation has been going on for months now, but it has finally reached a real inflection point. Could this be the financial crisis 2.0? Well, the answer may actually surprise you a little bit, and we will discuss why it will impact you even if you don't own a single company tied to China. But don't worry, there's something you can do about it, and I will give that to you as well. And all I ask for in return is for you to hit that like button and subscribe to this channel if you like the truth without the hype. And don't forget to check out my website, as we have added Zoom-style mastermind sessions for free to go along with the 4 courses if I can do my numbers right, my watch list with price targets, buy and sell alerts, 100 plus videos, live weekly Q&As, and a ton more we'll discuss at the end. And just remember, before blasting me, I run no ads in the middle of my videos and I have no sponsors. So I'm not going to waste your time discussing all the issues and background with this whole situation. There are plenty of videos out there covering the mechanics of this, and we would be here for an hour, and nobody wants to hear me talk for an hour. I mean, seriously, not even me, I don't want to hear that. But that is just a precursor to this news that broke and why I broke my regular schedule and delayed that video and instead released this video today. And this latest news pretty much encapsulates the desperate position Evergrande is in. They are offering property and parking spaces instead of cash as payment. Basically saying, we have no money to give you, but here, you can have some property and parking spaces instead. I mean, what would you say to that? I mean, I know for me personally, unless the discount is significant to the point of stupid, I'm basically telling Evergrande to kick rocks, buddy. But this shows you how dire their situation is and shows you why they have no real way out except basically give away the assets that the very company is built on. That's a terrible situation that looks very similar to Lehman Brothers. But unlike Lehman, Evergrande has property to give away instead of liquidity. But just like Lehman, only the government can save them because the property will not be enough in the end. So the ball is firmly in the court of the Chinese government, and global markets will recede significantly if China botches this. But Luke, what does Evergrande have to do with my US stocks? I don't own any Chinese stocks, so why would this affect me? That's actually a great question, but the truth might hurt a little bit, and I know some may actually get mad at me and unsubscribe, but you guys are here to get the real deal, not have smoke blown up your butt. The truth is, the global economy is dependent upon China just as much as they are on the US. China cannot go away tomorrow and the global economy would be just fine. The US is dependent upon China, China is dependent upon the US, and the world is dependent upon both those countries. What happened to the global markets when US banks were at the risk of defaulting in 2008? Some were caught up in our mess, but many were not, but they still melted down because the world is connected to the US. And the world is also connected to China, and if China plunges into a Great Recession type event like the US did, the global economy will dip into a recession just like it did when the US had its Great Recession. Now, I don't think it's going to be nearly as bad as the Great Recession was, but nonetheless, you will see a sharp downturn if that happens. But there's good news with all this. The US laid out the blueprint, warts and all, we didn't get it all right, but now the blueprint is out there on how to deal with this. The question is, does Beijing follow the blueprint? If they follow the blueprint, minus the mistakes that the US made, this is just a blip and an opportunity to buy on some short-term weakness. However, if they screw this up, then look out. So what can you do? I mean, should you sell it all and wait it out? Should you just stop investing altogether? Well, the answer is actually quite easy. Just be prepared and have a plan for what you will do in that scenario, or really any scenario, before it happens. Think about if the market dips 10%, 20%, 30%, what you want to do. I mean, the reality is nobody knows if it's only going to dip 2% or 25%, but I do know what I want to buy if that happens, and what price I want to pay, and how heavy I would add based upon that discount. It's already planned out, so when situations like this come up, I'm ready to go. And don't worry, even if you're not comfortable doing valuations and identifying those price targets, then just continue to DCA into the stocks you have the highest conviction in and not even pay attention to the noise at all. The answer really is that easy. In the end, what you do is up to you, but do not wait until everything is in crisis mode before deciding what to do. And if you don't have a defined plan for your stocks, or you don't know how to value a stock, we can help you with all of that, as there is a course in the Market Insiders Credit Group dedicated to that, along with creating an infinite money loop and other courses available as well, along with live weekly Q&As where you can ask me basically anything, a great Discord group, tons of exclusive videos, downloads, and more, all for the price of a meal for 2 at McDonald's. Consider it a cheap date that went really well. So check that out. It's the first link in the description in the pinned comment. So thanks for watching, and we'll see you in the next one.